I'm Charlotte McLeod with investingnews.com, and here today with me is Stefan Gleason, CEO of Money Metals. Thank you so much for being here. Great to have you.
Great to be back, Charlotte. Thank you.
Really good to be catching up with you. It's been a year since our last conversation, so we have so much to go through. And where I thought we could begin is, of course, with gold. So price has been on an impressive run, although right now we're in a little bit of a summer slowdown or cool down. I wanted to ask if you can set the stage by talking about where you see gold in the current cycle.
Well, I think we're still very early in what will be a very exciting long-term bull run in gold. And, you know, the last 2 to 3 years has really been kind of a sleeper period, at least in terms of Western demand for gold and silver. We just haven't seen much. In fact, at least on the retail side, you know, and as Money Metals is one of the largest online precious metals dealers in America, we saw more demand on the retail side during COVID, which was before gold and silver really started taking off and broke above 2,000 like it did about 2 years ago. But since then, since that breakout, we've actually seen very little participation from the U.S. retail investor. And even at the institutional level, only in the last few months have we started to see net inflows into the ETFs. And so at least as far as the West is concerned, it's been sitting out. It's been sitting out on this massive run in gold that's taken us from $2,000 to almost $3,500 an ounce. And that is, you know, interesting because obviously that's a big part of potential demand is the West. But, you know, we've seen lots of good results in the stock market other than you know, in April during right after so-called Liberation Day, there was a big downturn, and then by the way, gold demand picked up in the U.S. during that period of time. But for the most part, gold has had a lot of competitors for Western investors. Whether it's been crypto, the stock market itself, other assets. Obviously, the bond market has struggled a little bit, but the stocks have done just fine. And so I don't think people are really feeling the impetus in the West to buy gold and silver. And in fact, we've seen an increase in selling than what we have historically seen from retail investors who've been sitting on gold for a long time. And many people are monetizing those gains and taking cash. I don't think that's necessarily a good idea for the long term, but we're seeing that happen. We're seeing a little less buying and we're seeing more selling. And so, you know, what's really been happening has been a story of Asia and of central banks. And of course, also in reaction to the weaponization of the dollar and the SWIFT system, which you've talked about on the show many times. So those are the things that have been driving the demand. And I think, you know, that continues. You see less price-sensitive buying from central banks. They continue to buy. You know, Asia is still very strong. If the West kicks in while those things are ongoing in the East and with central banks, then I think we see a very, very exciting further advance in gold prices. And I do think that will be happening over the next year or two. But, you know, obviously we're in a big sideways move here in the last few months, but gold has done extremely well. It's not getting the credit that it should. It's way under-owned in the U.S. and even in Europe, but I think that's changing. So I think we're still very early, and the reasons behind people buying gold and silver are only increasing and the need to own it. So I think we're looking good. I wouldn't necessarily say that's going to be the biggest performer among the precious metals going forward, but it's been fantastic up to this point, and I think it's going to continue.
Great overview, and you really went right to the heart of one of the reasons I wanted to have you back, which is to find out what you're seeing from customers at Money Metals. So if we can maybe go in a little bit more to that, I think the key question to ask is we haven't seen the participation from the West yet. What brings those Western investors back in? Do we have to see declines in those other assets you mentioned? Is there something else at play? What are you thinking?
Yeah, I think that's the number one driver. I think the stock market continuing to be elevated and do well is probably the biggest factor in why investors are not coming into gold in droves like they are in other parts of the world. So I think there's still a love affair with paper assets in the West. I think that people are very comfortable with that, and frankly, they haven't been penalized for owning them. Stocks have done quite well, at least in nominal terms, and I think, you know, we're going to need to see that reverse, and when that does, that's when I think we see the U.S. demand pick up big time in gold and silver. And then also, I think at some point, if you get a runaway galloping upward move, then there's the fear of missing out starts kicking in, more of the speculative mindset. But again, in a backdrop when other assets are doing well in nominal terms, it's hard to see, a total switch into the hard assets like I think we'll eventually have.
And, as we've been talking about, we do have the gold price still historically elevated right now, although, of course, we're in a little bit of a pullback at the moment. I think maybe some people might be looking at it and thinking, well, it's a little bit high priced at the moment. So I'm wondering if you could go into, if people are looking at buying physical gold, where might they be able to get the best value right now?
Well, pretty much everything is lower in terms of premiums, and that's the amount that you pay above the spot price to buy any kind of physical form of gold or silver, whether it be a bar or a coin. So, American Eagle coins have come way down. You can acquire those very close to spot now. They were, $200 over spot not too long ago. Really, the most efficient way would be like a 1 ounce gold bar, a 10 ounce, a 5 ounce gold bar, a kilo bar. These are available at very low premiums to spot. And frankly, probably certainly the lowest premiums we've seen in about 6 years over spot, especially in percentage terms. And so that's a reflection of lower retail demand, which is also manifested in more people selling, which has caused the premium structure to fall because, not only there's more secondary market inventory, these things are resold, they're still in beautiful condition. Condition isn't really an issue when you're buying a gold bar or even a bullion coin. But the point is that there's a lot of this stuff available that's caused the premiums to come down. If you're a mint, frankly, you're doing quite poorly right now. There's very little need, at least in the West, and certainly in the U.S., for newly minted product because there's so much secondary market product, and a lot of the newly minted product costs more for the same item than the secondary market, and so a lot of mints don't have much to do right now, whereas 3 to 4 years ago they were unbelievably busy. So I think, look for we always feel you should look for the lowest form or one of the, look at the lowest cost ways of getting into gold bullion. Make sure you own it directly. Stay away from exotic types of things like special run, premium items. Look at the melt value, understand what the resale value is. If you were to sell that right back to the same dealer at the same time, what would they pay you? Avoid the dealers that are advertising on TV with the high markups and the celebrity spokespeople. They're usually trying to get you into something supposedly special or collectible. That's not the way to do it. So yeah, in the physical form, I would say your best deal is going to be 1 ounce bars, Gold Eagle coins, things like that. So on silver, 100 ounce bars, 10 ounce bars, silver rounds are very, very low priced way of getting access to silver. So, we like the bars and the rounds, and then bullion coins.
Really good to get your thoughts there. And of course, we will go over to silver in just a little bit. But before we go, just a bit more on gold. So you outlined a number of the important gold demand drivers right now. And we talked a little bit about the price. What do you think is it that pushes gold into its next leg higher? We're mentioning buying in the West. Is it something else that you're looking at that causes that next push?
Yeah, I think the Fed resuming the rate cuts certainly is going to be a bullish factor for physical gold. And I think that there's still some debt problems out there. And if the Fed switches into QE, gold does well in a negative real interest rate environment. And so that obviously that means that the interest rates are lower than the inflation rate. Well, right now inflation is higher than the Fed probably wants, but they're not willing to necessarily stick with the rates where they are. And probably, in many ways, based on the true rate of inflation, they already are in a negative real interest rate environment. But if they start cutting, which I expect them to do this fall, and probably half a point by the end of the year, I think that kind of environment, and especially if it continues, leads to more steeply negative real rates, and that is a very bullish condition for gold. And then if you add, a stock market rollover into that, then I think that's a good combination. Now, this, there's been talk about this gold revaluation concept, and I really think that that's overblown. The idea that, I mean, it is technically possible. It is technically possible for the U.S. government to change the statutory, or to change the book value of gold on its books, but doing that doesn't inherently affect the gold market. Unless they go to the Federal Reserve, which holds gold certificates, and demand more cash in return for the gold certificates, which then would be worth way more in nominal terms, because right now they're priced at $42.22 per ounce. So I think, and I don't think they're going to do that, by the way. And even if they did that, the Fed is not, and the Treasury is not going to open up gold and start buying it on the open market. So I think it's more of an accounting trick. It may lead to a little bit more funding for the government if they were to do that, but I don't think they're considering to do that, at least not in the near term. I do think that remonetizing gold through, is part of the solution ultimately to the problems we have, but I don't see that being sort of a near-term idea. And it's not really what I don't believe it's what the Treasury Secretary was talking about when he said he was looking at monetizing the asset side of the balance sheet. I think that was misunderstood. And in fact, he himself said that's not what I was talking about. So if you believe him, I kind of do.
Right. Yeah, fair enough. That's an interesting point there to make, and a really good topic to go into, very timely. Just another timely one that's kind of been in the headlines lately is the tariff situation around gold. Do you think we've seen resolution there in terms of all the turmoil?
Yeah, I do. I don't think there's going to be import tariffs on physical gold bullion. I think it's been completely chaotic, as we've seen. And even that thing a few weeks ago, there were refineries that were asking for clarity on importing rules around kilobars and other items. And I guess the customs came out with a memo, or in response, they responded to one of these and said, oh yeah, there's going to be this, 39% tariff on importing kilobars from Switzerland. That was crazy. One hand doesn't know what the other hand is doing. Obviously the Trump administration reversed that bureaucratic decision there that was done simply in response to an inquiry. But I know that a lot of folks, including us, who have been importing gold from Europe have been asking for and needing clarity on what's happening with the tariffs. But I think it's pretty darn clear at this point that there's no intention to put tariffs on physical gold imports. And I think that would be very damaging and destructive if they did.
Well, it's good to hear it from you, because you're obviously closely involved with that. So I think that gives us a nice idea of many of the factors impacting gold right now. Of course, we want to talk about silver as well. So the price has been on the move this year, although we didn't get past that $40 level. I think people are wondering if that's going to happen. If you look at silver, what do you think is driving that move?
Well, I think it's catch up. I think definitely silver typically will start slow and then catch up as people move more into the metals. We're starting to see that transition where silver is finally getting a little bit of love. I think it's still at 88 to 1. It's a massively high ratio historically. It's not 106 to 1 like it was, briefly in April. But it's historically very high. And I think that, that is what we see happen as the gold bull market matures. Silver starts catching up and then eventually outperforms. So I think we're kind of in that transition period where the gold bull market is well underway and silver is starting to, make a move. Now, there's also this tremendous, historical resistance at $50 that goes back all the way to 1980. That's over $200 in today's prices. So silver is dramatically less. Of course, it only briefly got over $20 in 1980. It wasn't like it was there for very long. But I think that there's a lot of eyes on the silver market. And as it breaks above 40, which I think is a key level, and then goes and runs, and I think it will run towards 50 probably by next spring. If it breaks above 50, that is going to be a huge signal, a huge buy signal. And that's when I think you're going to see a lot of attention turn to silver in the mainstream. You're going to see people see that they can get silver much cheaper. Gold is very, very expensive, $3,500 an ounce. It probably will be higher when this happens. But the point is that people start looking at silver as a bargain. And even though it's at $45 or $50 or $55, I think it's going to gain momentum, and especially if it gets over that $50 price. I do think that we're going to be challenging the $50 level by next year. So we'll see. And then if it breaks, and I think when it breaks through that, it's gonna go quite a bit higher from there.
Yeah, those higher silver price predictions are definitely starting to sound more and more realistic. And what you're saying ties into another point I wanted to raise with you is obviously every investor is different, but if you're looking at gold versus silver, what would you see as the better precious metals buy right now?
Well, I mean, I always feel that gold is something everybody should start with. It's more stable. It's a much more liquid market. It doesn't move up and down as much, so it's a little bit more a sleep easy kind of metal. I think everybody should start with that. Once you have a position in gold, then yes, increase with an allocation to silver. It does have other variables. It has those economic, the economic demand. It still has monetary demand. It's a bit of a schizophrenic metal. It has both qualities of the economic and the monetary, and sometimes they work against each other. But I think so. It's a bumpier ride. People that are new to investing in precious metals should probably be careful, because you can get very scared and sort of forced out of your position if you're a little bit inexperienced. So people shouldn't take on more exposure with silver if they can't handle the volatility. But that said, I mean, at this point, I would start prioritizing silver. If you already have gold, maybe even get as much to a 50-50 allocation. If you have a very long-term view of precious metals, then I think silver will do way better over the longer term than gold. But if you have a 6, 12, or 18, 24-month mindset, then you're probably going to be better off with gold. So, it just depends on your risk appetite. It's a much more exciting metal, and I think long-term it has more upside.
Very fair. And I'll throw platinum into the mix as well. I wanted to bring that one up to you because the price has been on the move in the last couple of months. So where would you fit it in? And are you seeing interest from people right now?
Yeah, a little bit. I mean, a little bit more than usual. In terms of money metals breakdown of gold versus silver, it's only started to kind of get back where silver's close to the demand of gold. But platinum and palladium is like 1% to 2%. Platinum maybe last year, maybe 1.5%, 1%, and maybe moving towards 2% of the overall revenues and sales volume that we do. So it is very low in proportion to gold and silver. And I think that's appropriate. I mean, it really is a different type of metal. It's extremely economically sensitive. It is obviously a tight, there's some shortage, indications of tightness in supply. Palladium, perhaps less. So I'm very bullish on platinum, but I wouldn't put that at the center of my precious metals portfolio. It's just another sort of diversifier. And, platinum has been historically at a premium to the gold price. And up until about 10 years ago, it almost always was higher than gold, and sometimes as much as twice as high as the gold price. So that today we're less than half the gold price. We were a third a few months ago, actually 2-3 months ago, just then, is that when platinum finally started perking up. So, I think that alone is a good reason to maybe get a little platinum exposure because of that catch-up move. There's some interesting things happening in platinum on the electronic side, on the hydrogen fuel cell batteries and things like that. Jewelry, there's jewelry demand switching from gold to platinum. And so those are other factors that are driving platinum right now. But again, I would keep it as a small allocation, and that's certainly what we're seeing. We're selling more platinum, but just a little bit more.
Well, that context helps a lot. And now that we've spent some time on the physical precious metals, I wanted to go over to the royalty and streaming space. So this is a sector that you pay attention to. And before we turn the camera on, you're mentioning that Tether has taken a stake in one of the royalty and streaming companies. And want to get your thoughts on that. I'll mention this is the second time that I'm hearing about that deal in the last week or so. So I think it is important to go through.
Yeah, so Tether Investments is the largest stable coin. And of course, stable coins there was a big package of legislation that passed in the US where the posture has very much changed in the US towards the cryptocurrency market. Instead of trying to throw everybody in jail, which is what was happening for a few years, They're actually embracing the innovation and technology around that. And stable coins are the idea of having these tokens for payment that are backed by, say, dollars or even gold. Now, Tether has the largest dollar stablecoin, and frankly, it's an extremely profitable business for them because people are depositing dollars, but usually from third world areas where they don't have access to banks or payment mechanisms, and so they don't necessarily mind that they're not getting interest. And then Tether then takes those dollars and invests it mostly at first in treasuries, short-term treasuries, and have, with the 4 or 5% yield, have been getting very large profits. Well, they've now become a very large, I think the 7th or 8th largest buyer of U.S. government securities as a result of this mousetrap they built. And as anyone who owns a lot of dollars these days, they are getting nervous about having all the dollar exposure they have, which is perfectly reasonable. And so they have been now diversifying their investments into other things, including physical gold, which I think Tether Investments now has like $9 billion in physical gold. They literally bought a bunker in a nuclear bomb shelter in the middle of a Swiss mountain to store their physical gold to back the Tether system. And they also have crypto and other assets, but they've now taken a piece of that dollar-based asset base and started investing in mining royalty companies. And we're talking about a company that has $160 billion worth of reserves. And so they recently bought a 50% stake in Elemental Altus, which is about a $500 million gold mining royalty company. And this is a company I'm familiar with. I'm a part owner, a small owner in it. And I viewed that as a very bullish situation, not just for Elemental, but for the royalty sector in general, to have a massive investor like that come into the sector and want to, further diversify into the royalty sector, which is another more sort of safe and stable way of getting into the gold sector, much less risky than owning mining stocks and certainly exploration stocks, which are like lottery tickets. So mining royalty companies are historically great performers. For a lot of reasons, they remove a lot of the negatives about investing in mining. You don't have as much of the government risk. You don't have the operational risk, the regulatory risk. You can diversify across many assets. You don't have ongoing capital costs, and you just take a percentage of the revenues when they come out of the ground. So it's a great business model in and of itself. And to have Tether come in with their massive treasury and make a big investment there, starting with Elemental Altus, and then trying to use a company like that as maybe a catalyst to roll up other royalty companies in the space and make new investments. So I think that's a very bullish factor for the mining royalty space. And so I'm a big fan of that space in general, and I think it's going to get pretty interesting with new investors coming in like Tether.
That's what I was going to follow up by asking. Do you think we'll see more entrants like Tether come into the royalty and streaming space or the gold sector in general? Because I know still among precious metals investors, there is that hesitance when it comes to external crypto-focused businesses coming in.
Yeah, I do think that the stable coins will start. There's another one called Circle, which has the same problem. They have massive dollar stockpiles, and that's a depreciating asset. And so diversifying out into other assets, whether it be gold bullion or royalty companies, I think that's quite reasonable. I think Tether is attracting attention because they're the dominant player among the stable coins, and others are looking at that. And of course, there's also a lot of launching of stable coins. And I'm not necessarily saying I'm a big fan of stable coins, and I'm not really necessarily saying that gold-backed stable coins are going to be a good thing or a great thing. The thing about the dollar is it circulates because of Gresham's law, and that includes a dollar-backed stable coin. It's the bad money, right? I mean, it may be a bad money connected with maybe a smart platform, maybe less regulated, maybe easier for people in other parts of the world that don't have access to banks to use, but it's still the Federal Reserve note, and it's a depreciating asset, and that makes it kind of a currency people want to circulate, like a hot potato, right? So if you have a gold-backed stable coin, do you really want to spend your gold? I want to save my gold. I don't want to spend it. So that's why the better money goes into private hoards. It's called Gresham's law. The good money pushes the bad money out. The bad money pushes the good money out of circulation and into private hoards, and the bad money is what circulates. So a dollar-backed stablecoin is the bad money. It's just a kind of a cleverly well-built, enabled way of using it. So, again, I'm not against cryptos. I'm not really super excited about them. I still think that, hard assets are the way to go. But these developments are significant, and there's certainly a lot of resources in that space. And to have that turn towards the gold space, which has been starved of capital, especially the mining sector for all these years, last 15 years, I think it's a very positive development. But that doesn't mean that you have to get excited about crypto, but I think it's a reason to get excited about mining equities and particularly royalty companies.
I definitely see what you're saying there. So thank you for going into that. I think there's a lot of nuance to unpack, and it'll be really interesting to see where it goes. Also wanted to go into you with policy initiatives in the US. I know you're involved in tracking what's going on in terms of making gold, silver, precious metals more accessible to people in the US. So anything you would highlight there, developments you've seen recently?
Yeah, I think that we have seen a tremendous amount of momentum pick up for sound money policy. So Money Metals is very focused. Obviously we're a bullion dealer, we're a depository, we have a lending program. But we also are involved in public policy in the U.S. trying to pass laws that promote sound money. And the most important of those policies, we think, in terms of re-enabling or remonetizing gold and silver, is to remove the taxation. The taxation around the buying of precious metals in the form of sales tax, getting rid of the sales tax. That's number one. 45 states now have ended the sales tax in the U.S. It was 30 states when we started about 12 years ago, or 33, something like that. So we've seen a big amount of success in the sales tax removal area. Then from there is the income tax. So removing income tax when you sell. So that's a federal problem, but states also charge income tax on capital gains. And so we are now moving more towards encouraging states to remove the income tax. And I believe 6 states, there's 8 states that don't have a state income tax, and then there's 6 that have affirmatively removed it from gold and silver. So we now have 14 states that don't have income tax in gold and silver. There's other types of taxes on businesses that sell gold and silver, and tax them on their total sales when their margins are this small. So there's other things to do on the tax front, but the gold and silver sales tax and income tax are the top 2. And we're seeing a lot of progress. I think we passed 7 bills this year. 5 of them were relating to taxes. Last year it was 6. The year before it was 5. Before that it was 3. 10 years ago, it was our first one. So, we're seeing a lot of momentum. This past legislative season here in the States, Money Metals saw, I think, something like 30 states introduce bills. There are about 50 or 60 bills involving sound money, when 10 or 12 years ago, there were just 3 bills. So we're seeing a lot of enthusiasm. And of course, that's partly as a result of the things people see happening with inflation, with the monetary system. So, they're trying to do something about it. And now they're seeing, hey, there are things we can do about this. And so removing the taxes, then encouraging states to own gold and silver as a reserve asset. So just recently, in the last year, we had both Utah and Wyoming start a gold reserve for their states. Ohio owns gold, and several other states are now looking at gold reserves bills. There's other bills involving harassment of dealers and harassment of investors, privacy invasions, things like that we're addressing. Several states have pretty hostile laws towards the sector. So, but we think removing the friction on the buying and selling by ending the taxes, getting a state to bolster its reserves by owning gold in reserve and bolster its finances. There's other proposals out there that are asking states to engage in public-private partnerships with payment app and payment vendors in the gold payment apps. We have some mixed feelings about those. While we think some of those ideas are well-meaning, we're not sure that the state should be embracing public-private partnership with private companies for payment app type infrastructure. And particularly since it could spawn a very large regulatory rulemaking process, which we're already seeing in Florida, where the state of Florida, on a bill that was sold as a sound money reform is now actually going and writing very burdensome regulation for the entire precious metals sector, which impacts not just dealers, but anyone who stores gold and silver, and also customers. So we're monitoring that area with some skepticism, but on the whole, it's a very positive set of developments in the U.S. for sound money at the state level. The federal level is a much bigger problem. That's actually where the problem originates, with the Federal Reserve System and Congress. But there are some bills there. We have a bill to audit Fort Knox, including any encumbrances, that may have been placed against the gold. There's a bill in the House that was introduced last month that would address that. Of course, there was a lot of talk about that a few months ago. They didn't do anything, but we didn't need a PR stunt. We didn't need a video walkthrough like Elon Musk was proposing. We needed an actual audit, assay, inventory, and an examination of any leases, swaps, pledges, other encumbrances that may have been placed against the gold. So there's the right way to do that. There's a bill that's been introduced that hopefully will get some traction. So we've got some things going on at the federal level, but the real excitement for the sound money movement has been at the state level, where a lot of these things are being achieved.
Really good overview there as well. Thank you for going into that. And maybe just a small follow-up, because you're mentioning the Fort Knox audit, which did get a lot of headlines. As we see these state level reserves being built up, are there mechanisms in place to have ongoing audits and tracking of that so people know that it's actually there?
Yeah. Well, the good thing is that the states are putting these into depositories that have these procedures in place. So they're not giving it to the U.S. government. If they're giving it to the U.S. government, there would be no audits going on, because they don't, or at least no credible audits. They have a process. They audit the seals. There were problems in the past in the U.S. bullion depository where seals were affixed to doors that the seals had been broken, things had been moved. They didn't re-audit before they put the seal back on. So you can't just say it's been audited 30 years ago, we don't have to audit it again. When you open it up, something happened, it wasn't re-audited. The principles of auditing, are dual controls, ongoing. It's not one and done. It's an ongoing process. Whenever anything is open, like at Money Metals Depository, we open a container, it's under camera. There's two people involved. There's checking, there's testing. And anytime a seal is broken, it has to be re-audited. And so, private depositories, whether it be ours or others that are involved in these state reserves, are doing, or should be, and I think are doing, the right things with audits. But they're not giving it to the U.S. government, that's for sure.
Okay, that is great to hear. And I will let you go, but before I do, any final thoughts you would leave with precious metals investors right now?
Yeah, I would say, we're still in a market that is really undiscovered. And I can tell you, if you ask all the people in your orbit how many of them own gold and silver, I bet very few, maybe 1%, 2%, 3%. Maybe they're not going to tell you, which is probably smart. You don't want to talk about what you own, especially if you have it in your house or whatever. But the bottom line is, less than 2% of the U.S. public has any gold or silver whatsoever, other than maybe a piece of jewelry. And that's a problem. I think that's going to change. I think we're very early. I think, as the stock market rolls over or inflation kind of runs away, and yet the Fed is slashing rates like there's no tomorrow, I think we're going to see an awakening in our country and in North America and in Europe, where we'll see a lot of people coming into this. But right now we're very early, and we're kind of on the cutting edge, you and I and everybody who's listening today.
Well, I think that's a really good place to wrap it up. So thank you so much for coming on to go over what's happening in gold and silver, and of course, a little bit of platinum. This was great.
Great. Thank you. Thanks, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Stefan Gleason with Money Metals.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.